going to try to cover a lot today about the benefits, the costs, and also the considerations that those looking at a reverse mortgage should be aware of. You hear so much about the benefits. These seem too good to be true. So I won't just stop at the benefits. I'll reveal some of the costs and considerations someone would need in order to make an informed decision about whether they want a reverse mortgage. The primary benefit is for a senior that has equity in their home, they can secure a reverse mortgage and take advantage of that available equity that they have in their home. It takes a formula that includes their age and the value of the property to determine how much equity they currently have and how much they can access. Rule of thumb is roughly 50 to 60% of your equity is available to you because the bank and the government that insures these loans wants to make sure that you always have equity at any given time in the future. How best can seniors take advantage of this equity that they have? For a senior that has a mortgage, is currently making payments on a first mortgage, maybe even a first and a second mortgage, and it's just become a bit of a nuisance because as their income may have gone down or has become fixed, they still have to make these mortgage payments. And the benefit of a reverse mortgage is that any mortgages against your home have to be paid with the reverse mortgage. This is accessing the equity, and the secondary benefit is there are no payments required to be made on a reverse mortgage. So by paying off any liens against the home, a first, maybe even a first and a second mortgage, one of the immediate benefits is you will stop making payments on that mortgage. Working with some clients that are on Social Security, they live in a very nice house and they want to continue to live in that very nice house. Their goal is to pay off their mortgage, and the ability to eliminate that payment is increasing their cash flow by $2,000 a month and will allow them to live more comfortably in their home. The second benefit of using that equity is you also can pay off some other debts that may be out there that you just haven't been able to pay off. So there's two other benefits besides just debt consolidation. We're receiving supplemental income, and I'm always very careful to define. I call it supplemental income because it's money coming in on a monthly basis, but you really need to think of it as taking a mini loan every month. So I explain it that way because on a typical mortgage, when a mortgage payment comes due, instead of writing that check, they just increase your loan amount by the amount of that payment. There's nothing magical about it. It's just equity, and the appreciation that can be expected allows you to increase that amount of debt. So once we enter your age and the value of the property, that's going to tell us how much supplemental income you're able to receive. The other prudent reason for having a reverse mortgage with a line of credit is for a senior that has worked hard to create a very good retirement strategy, which includes buckets where they can pull money from. So there's fixed income, things like Social Security and pension, but there's other income, 401k, retirement income, simple savings that has been accumulated, invested in the stock market, mutual funds or bonds. So that is a summary of the benefits. I do want to take some time to get into other costs and considerations, things that our team makes sure that all seniors and their advisors to understand. So let's get into the costs of a reverse mortgage. I have originated forward mortgages for many years, and mortgages in general can be expensive, but reverse mortgages cost a bit more. But I'll also mention that although they're expensive, you'll pay more to sell your home just in real estate commissions and transfer taxes than you will for a reverse mortgage. I still want people to know that they're expensive. The biggest expense for a reverse mortgage is what makes reverse mortgages possible, and that is the insurance. HECM reverse mortgages, which are insured by the FHA. The available equity that we just spoke about as being a benefit is determined by putting a senior's age and the value of the property in to establish how much equity they have and how much equity they have access to. Well, there's an available amount of equity that is retained in the property, which is still the owner's equity. And the insurance is in place to make sure that the lender that provides these funds will, any time in the future, whether a senior decides they want to move from their home or if they stay in their home for their entire lives and their heirs are selling their home, that insurance makes sure that there's always enough equity to pay off the debt. So to continue on costs, besides just that insurance, there are closing costs. A senior has to pay a $125 up front because you will have to take part in a counseling session with an independent FHA approved counselor. That is normally done between 30 and 45 minutes. A senior also has to pay for the appraisal on their home, and I would figure about $500 for the cost of the appraisal. The other cost that I like to bring awareness to is, one benefit is you're not making payments. A cost, and we're going to go into concerns next, that loan will grow. Well, fortunately, most of us live in areas where your home value increases too. So the analysis that I've looked at, although the loans have grown in size because the senior didn't make payments, their equity stays consistent. So now that we've discussed both the benefits and the costs for a reverse mortgage, we're going to go into some final considerations. I'll often ask seniors what their intention is for equity that they have in their home. I don't want to go to the assumption all seniors believe I've worked hard to pay off my mortgage and I own my home free and clear and I just don't want to have a mortgage, or I'm preserving this equity for my children, my grandchildren. I don't want to make an assumption that that's what they're thinking. I always ask the question because I want to honor their interest. It's their equity. I would have them consider whether you want to access any of that equity now. Otherwise, you couldn't do until either you sell your home or through your estate. I'd also like to know, how long do you plan to be in this home? We only intend to be in this home another 2 or 3 years. That's a 2-story and we're looking to go to a patio home. And if I know that information, I can help them in their decision. In that example I just gave, I would advise that senior not to get a reverse mortgage right now. But I can also educate that senior when it comes time to purchase that next home. A reverse mortgage might be right at that point. This is a real life. Seniors are living in 2 stories right now. The prices of homes have gone up. They're interested in downsizing. Often they'll find out that 2-story home that they may be able to sell for $350,000 is not enough money to get them into the patio home that they desire. Patio homes are a relatively new phenomena, maintenance free. You have an association, 1 story, no basement, generally a flat lot. Very good for seniors. The reality is, depending on where you live, but in our area, those homes can often cost $600,000 plus dollars. So a reverse mortgage can be used in that scenario where if a senior sells their home and does not have enough money to purchase, they can put the money they have down, take a reverse mortgage for the difference, and you won't be required to make mortgage payments. You do have to have the financial capacity to continue to pay your taxes and your insurance on the home. Purchase use of a reverse mortgage is relatively new. The next consideration that I'll go into, like any mortgage, there's an interest rate. It's important to get as low an interest rate as possible. It's also worth looking at whether a variable rate or a fixed rate is best for you. Rates are very low right now. It makes these reverse mortgages even more attractive. There are programs that don't allow fixed rate, so I'll immediately want a senior to understand that if this is a program they're looking at but it doesn't come in a fixed rate, that they need to consider that. I did want to touch on costs. All costs can be financed into the loan. Appraisal cost and that counseling fee can get reimbursed to the senior at the closing. It isn't a case where you'll go into this and it'll deplete your savings any further. Generally, seniors have access to getting X amount of dollars at closing or setting up a line of credit where they can access more liquidity from their equity in their home. Prior to closing on a reverse mortgage, there could be some things identified in the appraisal report that need to be fixed. A senior needs to be aware the condition of their home will be a consideration. I hear so many times, is the government or is the bank, are they going to own my home? The simple answer is no. Just like a forward mortgage, there will be a lender that has a lien on your home. They have an interest in the real estate up to the amount of their loan. And yes, as we discussed, if payments are made, that interest will grow. But I made it very clear that a senior will never be required to leave their home as long as they meet the basic conditions that I discussed. My name is Craig Schweiger. You can reach me at 412-866-HOME or email me, craig@fedreverse.com.